Hey guys, welcome back to my channel. In today's video, we're going to talk about the biggest and hottest, or should I say the coolest IPO of the year, which is Snowflake, ticker symbol SNOW. In this video, I will break it down into 4 different sections. First, why there is so much hype about this stock. Second, some of the advantages that Snowflake has to offer compared to their competition. Third, some of disadvantages about this company. And lastly, my personal opinion, why I think there is no rush to get in, even though there is so much hype about it. And for those of you who are new to my channel, please go ahead and click that subscribe button and turn on that notification bell. That way you get my latest video and when I will start the position with Snowflake. Anyways, I make weekly video about personal finance, investment tips, and content creation. And without further ado, let's go ahead and get started. For those of you who do not know what Snowflake is or what Snowflake does, Snowflake is a cloud-based data warehousing software company that was founded in 2012, which was about 8 years ago. It allows corporate users to store and analyze data using cloud-based hardware and software. And when I'm talking about data, I'm talking about big data here. Snowflake now runs on all 3 major cloud computing services like Amazon Web Services, Microsoft Azure, and Google Cloud Platform. So the reason why Snowflake IPO has gotten so much hype is due to the fact that it has been backed by Salesforce Venture, and most importantly, by Mr. Warren Buffett. Is a legendary investor. He hasn't invested into any IPO since Ford went public back in 1956. So in summary, Snowflake received $570 million from Warren Buffett and another $250 million from Salesforce Venture. And on its IPO day, it's supposed to be priced at $120, but by the time it opened and it's publicly traded, it started at $269.50 per share. Currently, at the time of this recording, the price of Snowflake is sitting around $243 a share. And that is 111% growth on the first day. Speaking of growth, I believe this is another factor that helped contribute to this hype behind this stock is due to the fact that every single quarter, Snowflake revenue has been increasing. Since quarter 3, 2019, their revenue was about $29 million. And as of quarter 2, 2021, that's their fiscal year, but it ended January 31st, 2020. Their revenue is up 121% growth and is currently at $133 million in revenue. That's not all, guys. If you look at snowflake.com and go to the bottom of the page, you'll see the investor relation link. If you click on that, you'll see the company highlight. Currently, they have over 3,000 paying customers, and of that 3,000, 56 of their customers, which is a corporation or a company, they're currently paying over $1 million in product revenue contribution to their revenue growth as of January 31st, 2020. And they have crazy high retention rate. They have 158% retention rate, meaning that their current customer actually buy more of their services and their products. So as you can see, this company has so much growth, has so much potential. That brings up the next topic, which is the advantages that Snowflake has to offer over their competition. According to StitchData.com, what sets Snowflake apart is its architecture and data sharing capabilities. Snowflake architecture allows storage and compute to scale independently, so customer can use and pay for storage and computation separately. And sharing functionality makes it easy for organization to quickly share, govern, and secure data in real time. Another thing that sets this company apart is Snowflake has great customer base. Currently, Amazon is only 4 times as big as Snowflake and only 2 times as big with Google BigQuery. This is a new company, guys. This is only an 8-year-old company, and they're already competing with big dogs like Google and with Amazon, even though they actually run on Amazon Web Services. That's their main advantages. is that they run on any of these companies. For example, if a company that is so big, they have AWS, they have Microsoft Azure, now they have to pick 2 different products, where Snowflake can just come in and run on all of these cloud computing services. With Snowflake, they can easily scale, and these enterprises only have to pay terabyte stored per month with Snowflake. And as far as compute, they only have to pay per second. So if they don't use it, their compute service is not running, they won't be billed. But at the same time, if they need to scale and run a big data, Snowflake can come in and it's scalable, so it can scale up or down. It's very elastic, and that's one of their main advantages for Snowflake. Now let's talk about some of the disadvantages that Snowflake comes with. So as you know, this company is not profitable yet. Matter of fact, as of last year, their net income was around negative 778 million. As of fiscal year 2020, which is the last 12-month trailing, their net revenue got even worse and they spent more. Well, I guess that kind of makes sense because they're trying to grow the company, but still, there is still a negative 95% down. And yeah, they're just bleeding cash right now. And who knows, it could take another 3 years or 5 years or even longer for this company to be profitable. And if you look at their EPS or earnings per share, as of fiscal year 2019, it is negative 0.73. And as of fiscal year 2020, they drop even more now to negative 1.43. And that is a 95% drop, which is crazy. And I expect them to spend even more in the next couple years as they ramp up their marketing and trying to take more market share from Amazon and Microsoft, also Google Cloud Platform. Next up is my opinion about this stock and why there's no rush to get in. High tech stock, at the beginning, it is usually overpriced. It's, in my opinion, is way overvalued at the moment. I mean, it went up 111%. Yes, I understand that it could lose out on some gain. It could go up even more, but what goes up eventually comes down, right? So I will buy in when it dips. And think about it, when they go public, who gained the most? The retail investor, us, or the early investor who put in the risk, who funded all of their operation? It's not us, right? So some of those early investor will most likely cut their profit eventually, right? Who knows? Could be a week, it could be a month from now. But personally, I am not investing into this stock just yet. I believe this company could go very far down the road, but until it dips and it shows signs that their company has a sustainable growth, and that's when I will get back in. As great as this company sounds and as big as this IPO goes, yeah, I'm not investing into this company just yet. So hopefully you guys find this video helpful. And if you do, remember to smash that like button until it turns blue. So thank you for watching, and I will see you in my next video.